Okay, here at VRIC 2017, I've got here Peter Schiff. EuroPacificCapital.com now.
That's the website, right?
That is
Plus
the website.
my Canadian company, Echelon Wealth Partners, is exhibiting here.
Okay.
And also Gold Money. So
Gold Money, sure. Okay. We got a Trump presidency. We've got Yellen talking about 3 hikes here coming up in the new year. I know you're a guy who basically says this is something that's probably about ready to implode. They can't raise. She always says she's going to, or at least telegraphs that, but there's always a hidden message. What are your thoughts?
Well, they should raise rates. They should raise them a lot more than they've already raised them. But the problem is you let the air out of the bubble, which nobody wants to do. And in fact, Donald Trump, when he campaigned, said we had a big, fat, ugly bubble, but doesn't talk about the bubbles anymore because he owns the bubble. And now he wants to keep it from deflating. So I think we're going to get more cheap money. I doubt the Fed will deliver on the 3 rate hikes in 2017, just like it failed to deliver on 4 for 2016. We only got 1. I don't even think we're going to get 1 this year, but we may very well get 1. The Fed has now it's now 1 a year, so maybe we'll get another one. I don't know. But inflation is going to accelerate at a much faster pace than the rate hikes. So regardless of whether the Fed raises rates or not, real interest rates are going down, at least in the short run. We'll see what happens to the bond market bubble because we could have a collapse in the long end. And so maybe even if the Fed doesn't raise short-term rates, long-term rates could go higher, especially if I'm right about a big pickup in inflation. That's one thing I think that the markets do have right. They're talking about Trumpflation. I think we're going to have quite a bit of inflation, but it's not going to be good for financial markets. It's not going to be good for the stock market or certainly the bond market, but it will be good for gold. It will be good for foreign currencies and emerging markets and commodities.
So we're sitting here with 200 plus companies here, one of yours. Is that the way to play this thing, or?
Well, yeah, I think that, look, there's a lot of gold mining companies. Gold's already off to a great start this year. Gold stocks, again, are the number 1 sector in 2017. They were by far the number 1 sector of 2016. Gold stocks bottomed out in the first quarter of 2016. We've gone a long way since then. We had a bit of a pullback late last year, especially after Trump won. But I think this is going to be an even bigger year. I think the gains that we had in 2016 are just a small down payment on much larger gains that we're going to get in 2017 and beyond.
So as far as infrastructure goes, a lot of language here I read today. He's going after NAFTA, knocking the TPP down. What does that spell globally? Is he stymieing trade or is he accelerating trade?
Well, Trump doesn't necessarily understand that the 2 pillars that have been propping up our bubble economy have been cheap foreign imports and artificially low interest rates. And to the extent that we no longer have access to cheap imports, either because the dollar falls or because we resurrect trade tariffs or a combination of both, that knocks away one pillar, and interest rates rising would be the other one. We made a deal with the devil, basically. We just got rid of all of our manufacturing jobs, but we still got to consume all the manufactured goods because we got them from the rest of the world, but we didn't have to pay for them. And I think we're going to be in for a rude awakening. And Trump keeps talking about we should hire America, we should buy from America. Okay, well, that's going to be a lot more expensive. And if we have to buy American, that means we can buy a lot less and we pay a lot more for what we buy. But it also means higher inflation, a weaker stock market, a weaker real estate market, and we're going to have to go through a recession. And I think it's going to be a very painful one.
And we've been talking about it forever. They keep prolonging it. Can they keep prolonging it?
Well, the longer they prolong it, the worse they ultimately make it. Hopefully, we're getting closer to biting the bullet. The problem is that Trump has not prepared anybody for that. He has talked about as if everything's going to get better and it's not going to be any short-term pain. It's like a miracle weight loss cure. Just elect me and you're going to lose 40 pounds. You don't have to diet, you don't have to exercise, but that's not reality. We have a screwed up economy, and it's been screwed up for a long time before Trump got here. But the only way to right this economic ship is to go through a very protracted recession where we restructure the economy. And that means falling asset prices, rising interest rates. That means we stop spending, we start saving again. And all this, takes some time, and there is no short-term cure. You just can't renegotiate our trade deals and expect all the problems to go away.
No, I agreed wholeheartedly. Why don't you give out your website so everyone can follow you?
Well, you can follow me at Europac.com is my brokerage firm, EUROPAC.com. also at schiffgold.com and goldmoney.com. And if people want to follow me online, listen to my podcast at schiffradio.com, or go to my YouTube channel, follow me there. I put out a lot of video blogs. I put out a lot of content. I mean, I'm the real news, right? The fake news is what you get through conventional media. But if you want to know what's really happening, you got to listen to what I have to say.
Great. Watched you for years. Saw you battle on Fox, and saw you in a Walmart parking lot one time. Get your life threatened, I think. So appreciate your time. Thanks, Peter.
Right. Thanks a lot.